currently queuing up and getting their questions ready. For today, though, we have some big news out of Messari. 2 big new features dropping in the same day. 1 feature and 1 very exciting announcement on our flagship virtual event, the Mainnet, which you can access by going to mainnet.events and signing up today. It's going to be June 1st through the 3rd. We spent a lot of time behind the scenes teeing up most of the leaders throughout the global crypto community. We've got representatives from Coinbase, Binance, Kraken, Bitstamp, many of the other major exchanges. Basically everybody that's on the top of the DeFi Pulse rankings, all the leaders in DEX, leaders in smart contract protocols, most of the top token teams. It is a loaded lineup of participants. And I'm going to have more to say about this later today. We think we've invested in solving the problem that all virtual events have, which is how do you keep people sticky? How do you keep people engaged? We've invested heavily in virtual expo, virtual networking, and unconference format that I think is going to be pretty slick for anyone that wants to participate and at least feel like they're getting out of the house, even if we still can't physically travel. So I encourage you to go over to Messari and check out the banner, which will link you to mainnet.events. You can see the full speaker lineup and the proceeds. 50% of profits are ultimately heading to COVID relief efforts through a combination of Binance Charity and the Giving Block, our partners. We're also working in conjunction with Blockworks Group and Nakamoto, and some of our headline speakers are going to include Balaji Srinivasan, Zuko, Sergey Nazarov, Meltem, many other folks that you probably know on a first name basis. So head on over either to the Crowdcast so you can have an interactive discussion with Catherine, or head on over to Messari and check out mainnet.events, June 1st through 3rd. It is going to be a good one. We also dropped in cohort in conjunction with support from Bitstamp, a mammoth Bitcoin halving series, 2 full-length research reports, the first of which dropped today, and 4 upcoming podcasts, the first of which is out with my friend Dan Matuszewski, who I've known for a long time, is a former head of Circle Trade. He talks a lot about the trading patterns going into the halving, both historical and this one. He's always entertaining and sheds a little bit of light on how you might think about the reduction in supply, whether it really matters, and the halving meme in general and its current position in the broader crypto macro conversation. It is a beautiful series. If you head on over and check out Halving 2020 in the banner at Messari.io. So 2 big events, and we're also participating actively in several of the online events this week and next. Talking about Ready Layer 1, which has done a phenomenal job using the same platform we've used, Hopin. So if anyone has participated in Ready Layer 1, we're going to be getting a lot of feedback from folks that have attended that conference, and there are a few features that we've added that hopefully might make the networking component even smoother, but definitely welcome your feedback for those that have attended. We are also going to be presenting, I'll be presenting in VR at Ethereal, and we'll be milling around the Consensus virtual event as well next week. So a lot of virtual events. Of course, these Monday, Wednesday, Friday events are a constant, and we will continue to do them because we get great people like Coley to agree to do Q&As. There are 78 fans on Periscope right now, a lot of hearts. For those of you that are liking this video, crowdcast.io/2bitidiot to join the interactive discussion with Coley, which we're going to get kickstarted in about 5 minutes here. Until then, quick update on the markets. We are starting to see a nice little rally, up 4% today in US dollar terms, Bitcoin at 92.5, which is the highest we've been in a while, trying to break through that 9,300 mark that we hit a couple of days ago. The macro narrative continues to get more compelling by the day. The EU had some bad economic data. They're now projecting about 7.5 to 8% GDP decline across the Eurozone this year. We heard earlier this week that the Treasury is expecting to borrow $4 trillion to cover the fiscal deficit this year, $3 trillion just in Q2. You can't print money forever, but you can for a long time when you have the reserve currency. So we're starting to see that percolate into the crypto markets. And Chow Wang, our veteran in-house trader and head of product, had put it best when he summed it up as follows: get out of financial assets and into real assets. Now, it's up to you to decide whether you think Bitcoin and crypto assets are real or financial. I certainly think they're real because they are provably scarce, like gold. But that is ultimately up for you to decide. I know I've already made my bet, and I've been sticking to it for the past 7 years. On the coronavirus front, there is reason to be optimistic worldwide in terms of people getting back to work. The curve has certainly flattened and started to come down significantly in Europe. Asia is more or less back to work. Hong Kong, folks have started going back to work with certain monitoring measures that in the West, I think, may be difficult to replicate. But basically everywhere but the US, things seem to be trending in the right direction. The Trump administration and the US leadership in general seem to continue to move in the wrong direction. And unfortunately, I think that the coronavirus is ultimately going to be like school shootings in the US, where we just kind of live with it. And people turn a blind eye, even though there's a lot of pain and human suffering. Hopefully, the worst is past and we've at least hit a plateau in terms of deaths, in terms of disease and general cases. But it is too early for anyone to tell. In the meantime, one way or another, we're going to see what happens once everybody starts going back to work this month and next in the US, and what impact that has on the disease progression and the economic condition in general. Certainly no good answers, but the one answer that seems universal is print more money, and that means going into the halving. You might want to buy more Bitcoin. Not investment advice, but if you take investment advice from a two-bit idiot, that is your problem, not mine. Other news on the day. We have Bittrex announcing they'll be launching an exchange token in June. Telegram foie gras-ing their US investors and saying that they must accept refunds because it looks like it's going to be impossible for them to actually deliver the tokens to US investors as anticipated. We've got Bitcoin hash rate and difficulty near all-time highs, will likely hit all-time highs right before the halving. And last but certainly not least, we had some more news from my favorite asset, Ripple, who disclosed, in addition to a paltry 1.2 million in XRP sales in Q1, that they had paid out to MoneyGram about $16 million in XRP incentives. So the XRP spigot is still up and running. That's good news. We don't have to worry about that. It is never broken, but it is just getting monetized in a slightly different way via corporate sponsorships. If you have other questions for me or for Coley, pop them in the chat over at crowdcast.io/2bitidiot. I'm going to sign off on Periscope until Friday, but if you are just on Periscope or just watching this on Twitter, you are missing out, because getting ready for the Roast Fest, we're going to invite Coley to the screen in just a couple minutes here. crowdcast.io/2bitidiot for Blue Horse. Blue Horseshoe loves Bitcoin. It's a clever handle. I appreciate that. Everyone else, thanks for tuning in. See you on Friday. Ciao. All right, for the truly hardcore, we have a terrific lineup of folks in here. I'll expect more people to trickle in the next few minutes as this has just gone live, and we promoted it in our newsletter and on Twitter. Moonwhale Danny, thank you for joining us as well. And without further ado, let's get right into it. Coley, no first name needed. Invited, accepted, and connecting.
Testing. Hello.
Coley, what's up?
How are you guys? Sorry, I've just got to do the daily swipe of the screen camera.
Well, I was going to say, if you're trying to clean your screen and wondering what's going on, well, it's not coming back. Doesn't matter how much you watch the screen off.
No, I did want to take a picture of it because last time we were chatting, you evaporated. So I'm glad you've changed your scenery a little bit so the holy light behind you doesn't blind us.
Yes. Now we just have a different sheen.
It's a great look.
It's a cloudy day here. It's funny. I
We
think
talked right before everything went down. Yeah.
Right before everything. I think like that night was the NBA shutdown. It was like right around there. It was like somewhere in mid-March. I'm pretty sure that was the last day of normalcy because we were talking about your All-Star game performance and dance-off.
Yes. I feel for those guys. That was probably the last time they had fun on the court.
Yeah, right. And ever since it's just been chaos. So I am now clearly in a different citadel. As are you. Last time you were still decamped in the office.
I still think about that being maybe the better of choices, but the office is we've fully gone remote. Our full team is all virtual and haven't skipped a beat. So we are one of the fortunate groups.
So let's start there. It's just as good a place as any. Binance has already been a leader in distributed work. I think a lot of crypto companies probably a little bit better equipped for this than other sectors for a few different reasons. One, the underlying protocols are decentralized. Two, it's a global industry and we're all just part of the traveling circus going from like global event to global events. So you think about like the future of remote work and a lot of the tools, even for companies that were centralized, they're not that foreign to use because everybody's been used to using Zoom. Everybody's been used to using, Slack with multiple, channels between Teams or Discord or Telegram groups, and kind of going back and forth between different messaging services, different, video platforms, and then of course, just spending time in different regions of the world when you're actually trying to get together for live meetings. What has been the biggest change for Binance US? Because I would dare to say that you're one of the centralized teams.
You can call us that because we're a centralized exchange. However, the kind of concept of crypto to me was very interesting to begin with. It's naturally global. Everyone can partake in it. And the only difficulty to enter is internet, essentially. So we had this hugely global aspect and very kind of decentralized nature of being able to virtually connect with everyone, virtually connect to your digital assets. And that was kind of a wonderful layer of cryptocurrency, industry. However, the adoption and the discovery of new projects was really done in person from this kind of travel conference, congregation of minds or ideas. And that's really how new projects were discovered. That's really how, new teams were put together. And so that aspect, we still are hurting in the crypto space. You kind of have to find this discovery, whether it becomes like inbound, I'm open for people to reach out to me, or outbound where you're just hunting in the weeds of the internet to try and find the next great idea. So I think those are some of the interesting things that have affected it. But in terms of our work, we've been working with a global partner on our technology side since day one. We've been working across the United States, covering all 37 states right now, and working with state regulators in the states that we aren't operating in. And that business has not changed for us. If anything, the best part about this was that we were able to open up our basket of where we were recruiting people from. So given that we're all remote working, it really doesn't matter to me if you're based in Michigan or Colorado versus, when we first started the company, we wanted everyone to kind of have that nucleus of an office and have everyone in place. So given that has kind of been dispersed, I've been able to reach and get, great talent from all over the United States, which is a big benefit to our team. And we've grown probably 40% since the quarantine lockdown has actually happened.
How big is the Binance US team?
We're about 20 now.
Excellent.
So it's been incredible to be able to see, there's a lot of quality in the market right now of people really looking for the right job. And we've kind of grown into ourselves to know exactly what we need to make our team work. And that's really just a wonderful thing to be able to offer those opportunities to folks because we're all locked in our houses right now. So.
I think you're starting to see this more broadly in tech where there's this flight to safety or perceived safety of the FANGs. And you've got this kind of perfect storm of uncertain macro environments, a backdrop where a lot of VCs say they have dry powder, but it might be much more difficult for them to raise subsequent funds. And just the way that fund structures work. You're reserving a certain amount of your capital for follow-on investments. So almost by definition, if there's not new LP money coming in or that starts to slow at all, you are going to see in the next 6 to 12 months a deal slow down, even despite the protests of some of the top VCs, around the world. That shouldn't, in theory, be much different in crypto, because the exchanges are really the only ones that make money. In terms of 90% of business activity in crypto, it's either seigniorage from issuing a token, or you're working at one of the exchanges and money changers, right? And on and off ramps. They're either the majority of business activity and majority of hiring, and or they're the primary customer of most other services. So data providers, staking services, technical infrastructure, et cetera. How have you thought at all about consolidation for Binance US? Are you one of the beneficiaries, or do you think most activity, to the extent that there's M&A, is probably going to be on the Binance global side, and then those resources get divvied up for Binance US and kind of other international subsidiaries or affiliates?
It really comes down to what fits our users. So if there's something that really benefits the US market isolated, and that's something that would be very beneficial to our users, absolutely, that's within our own onus. If there's something that benefits humans in general, and would be a beneficial asset to all global participants, then that's where Binance.com would have their hand in it. Because they're thinking holistically about the entire world, whereas our focus is really purely on the American audience. And so we factor in certain things to our platform that the rest of the Binance ecosystems don't even have to deal with, because Plaid's really just an American thing for right now. And so you kind of take the bits and pieces that are super local to those markets and be able to provide that. But the best part is these projects have already been considering a global audience. So likely, next projects aren't, I hope they come out of the United States, because there's definitely appetite for innovation here in the US, but a lot of teams have decentralized and parked themselves all over the world and are now, viable for any user at the end of the day.
One question we have from Chris is, as a New Yorker, I really need Binance US to serve my market by the time this next bull run starts. I have some shit coins I need to unload. I can't sell them on Coinbase. When will you have New York service approved? So you might object to the framing of the questioning.
No, it sounds like he's a realistic person. I feel so bad for New York. They've got tough tax situation anyways, but they've got some of the greatest financial markets and capital and smart people around the world, plus fashion and food, you name it. They've got plenty of perks on their sides. The downside is they do have an extremely tough regulatory environment that requires us to go above and beyond in order to get licensed in that state. So we're doing our best to get everything laid out so we can get forward with a license for New York, but I can't put a timeline on it, unfortunately. And we can only expect that quarantine is affecting some of our state regulators, because as our businesses are naturally virtual and ready to jump on a digital call or take a laptop anywhere, that's not the case for a lot of our state regulators. So we really are hoping and best wishes to them during this process. If anything slows them down, we can guess it would slow down our process of getting those 13 remaining states. But you're in our hearts.
New York is obviously the big one. What is the gating item for the other 13 states? Is it just like a combination of relatively small market size and just cumbersome local regulations? Or how do you think about the complete coverage process?
Yeah,
there may be states who just geofence for in perpetuity if it's too difficult or arduous a process.
Right. A lot of the process that people don't understand is to get a state money transmitter license. It's a full, complete process. I kind of equate it to applying to colleges. Like, you have to take the SATs. There's no way around that. You have to have good grades for the last 4 years. So there's no way of getting around that. You have to be able to write an essay, and oftentimes each school has a different essay. And some schools make you do 10 essays. And then you have to get recommendations and you have to get referrals. So that's essentially all the homework that we've been doing in order to get into college or get these state money transmitter licenses. And then you have that awkward silence where you wait. and everyone else waits, and your applications are in, and you just wait. And sometimes there's early acceptance, and sometimes you have to wait until May, or kind of the next cycle of when the schools release their admissions. So that's kind of where the whole process and that anxiety of applying to colleges affects is just as the same with applying to state licenses. So we've done our homework. We were kind of in that waiting and see mode. And it's really up to a lot of the states to determine whether our businesses are beneficial for their states and their users or their citizens. And then the other parts are where they have additional questions. And we kind of continue to advance that and teach them about what our business is. And the best part about this is that we're not the first digital asset marketplace to come into the United States. They're a little bit more familiar now than they were back in 2012 and 11. So I super appreciate the hard work of our predecessors going through and teaching people exactly what is digital assets and what we intend to do in terms of a business aspect. It will be familiar to them.
And how do you think about new products then? Because you get approved for one set of products on a state-by-state basis, and it's mostly spot exchange to start. Do you have to think on an asset-by-asset, a product-by-product basis? You can think about like Binance Global as like the full product suite. Yeah, and then that's
the final version, the grown-up, the varsity. Right.
Yeah, and then just different levers have to get pulled on a jurisdiction by jurisdiction basis based on what the local laws are. So what's available right now, and how do you manage the chaos of rolling that out state by state, or thinking about federal versus state restrictions on either a given asset, a given product type, or something that's not necessarily trading, but maybe more like staking services that you're now offering as well?
Yeah, so you highlight all the points that we think about. So when we break it down, we're applying for or working on getting more state adoption of our spot market business. And so that is going to entail other additional assets that we're going to be including, and they all go through our digital asset risk assessment framework, which has been established in the United States. We have our committee dedicated to that, and that's kind of how we approve and go forward with listings. And that's all run by our team. And then when we think about additional products that the US really wants, you can kind of question and go, is it worth pushing more products in such a smaller environment, or should we really get a better platform, a full participation from across all the states before we roll out more of these complex products that really do need as much liquidity as possible to be successful? So that's a little bit of a dance that we do between saying, okay, can we add more products now while we're waiting in this limbo, or should we just hold off until we get all of our state participation that we wanted, and then go and advance our product suite? So things that we've been able to advance include, the app. Clearly, that's been such a game changer for users. It's very obvious that America is quite mobile and mobile forward, at least, and that we've seen great pickup and adoption since we rolled out the app on iOS and Android in January. And then the addition of staking, we've continued to add more coins to that. So we now have 3 coins for staking: Algo, Atom, and Tezos. And we'll continue to evaluate other coins that have staking parameters that we can include and see how that works. What can we do and add that in? But it is a bit of a dance of one foot on legal and regulatory, and one foot on advancing where our users can begin to trade at the same level that the rest of the world is trading.
I want to talk about one area that is kind of top of mind for us as a data aggregator and analyst. And I'll also kind of touch on Moonwhale Danny's question here. You're going to object to the phrasing, so I will give you the exact phrasing of his question, but I will, more importantly, put the Messari lens on it as well. So, Moonwhale Danny asks, how does the SEC not see BNB as a security? I love Binance, though. Slight smiley face. You're not going to be able to answer that, so I'm not even going to waste time pretending that you can answer that. On the other hand, exchange tokens now are 4 of the top 20. Right, so Binance was the first, but now we have Leo, we have Wobby token, and FTX token penetrating the top 20. In addition, Bittrex just announced that they are going to be unveiling a token. I believe Poloniex is thinking about the same thing. So it's just this flood of tokens, all of which seem to have similar properties in terms of how they're multi-use between, making participants eligible for platform discounts or getting first in line for new products. And most of them are also incorporating some element of a programmatic buyback of the token based on some portion of revenue or some free market float calculation. That starts to look a little bit like it's got attributes of a security in the sense that you can actually come up with a valuation based on the cash flow of the platform, but it's not actually entitling you to any of the traditional governance rights or investor rights that you would expect for a security, and it's not necessarily governed by any one jurisdiction. So how do you manage this dance, number one, and what do you think the future of exchange tokens are in general? Because I personally see them as a precursor to what we will see as the first interesting security-like tokens. I've called them synthetic securities in the past, where they're not quite listed public stocks, but they have something underpinning them, unlike just a run-of-the-mill cryptocurrency or a digital good like an NFT.
I mean, I see it pretty straightforward in terms of the utility that BNB has to offer, partially because it affects so much of our users. And a lot of people don't know, but holding or hodling even one BNB gives you such a benefit on our platform. So as we kind of incorporate, holding more than one or holding more than zero BNB gives you 25% discount on trading fees inside of our platform. Holding over 500 BNB on our platform gets you 40% back on your referrals instead of 20%. And so we kind of just use it as a means of unlocking access within our own platform. It's also, within BEP2 protocol, there's countless projects. Talk about projects building on top of protocols and seeing that take off. The BEP2 ecosystem is pretty prolific in terms of who else has been building on top of the infrastructure that's underlying BNB. So that's how we think about it. Pretty straightforward, but it is kind of, you deduced it pretty well early on, of the exchanges in the space are the ones that are driving kind of true business revenues and true business models. And therefore, you're seeing such a pickup of these specific tokens that as these businesses grow, the coins required to unlock certain aspects of these platforms also grows by sheer number of users that are now joining our platforms.
Excellent. Stand by for 1 second. I actually have the
commercial break.
We don't need a commercial break, but I realized that I had paused the previous Ready Layer 1 session, and all of a sudden a new one started, and it automatically started blaring in my ears.
Oh gosh.
So I just had to navigate over to another tab and
do you have one ear that's like listening to a podcast all day long, and then the other ear is your like command center?
I am so awful at multitasking that is just a physical impossibility. Okay. Which is why I couldn't gracefully manage that transition as soon as I heard it blaring in my ear.
Not to worry. I've got like one set that's attached to my microphone, the other set is attached to my computer, and then there's a random AirPod somewhere that just has 80s music pump up in the background. So you'll see me like change them in when I need to, but it's we're still humans.
Yes, exactly. You guys have been rolling out a ton at Binance US. We had a high volatility day last week where Binance was unfazed, and some other platforms have had pretty obvious issues the last couple of quarters. BitMEX at first during the Black Thursday cascade of selling, and then Coinbase had an outage during last Monday's high volatility session. How do you part of this is how the system is architected, right, and how scalable it is. But there's also a timing element as well, because you just had a pretty major upgrade.
Yeah.
That was, I think, a few days before the highly volatile session. So there's a certain element of luck, and Binance and all exchanges are not 100% uptime yet. How do you think about scaling going into this next bull market, and what type of volume do you think you can support today?
Yeah, well, we definitely don't leave it to luck in order to make sure that our platforms can operate. So that was a scheduled and advanced system upgrade. .com had gone through one earlier over the weekend, and ours was scheduled for actually going to be a 12-hour downtime, which is a half a day of trading, and kind of from my standpoint, I failed by offering 24/7 trading, and then we have a 12-hour downtime, and we were able to reduce that down to about 7 hours. That we were able to keep our systems offline, going full upgrade, just making sure the maintenance of our systems is adequate, making sure we have the latest matching engine technology that we've been working on. We've got such a dedicated team to making sure that it's the most robust matching engine that can handle significantly more size than Binance US handles right now. And it's just our kind of reliability that we carry for our users that said we're going to have to be down, and there's no buts about it. But that did help us have, the most reliable day in the US there, which we continue to think is more important than anything else across the line. When it comes to the amounts that we're going to be able to see through our platform, we're anticipating ones that are not yet seen in the markets. And that's really crucial, because the day that adoption really hits across the world, or people really are forced into needing access or liquidity, we can't be that platform that shuts down. So it's really important for us just to maintain, keeping up on top of our system upgrades, as well as just communicating clearly with the market about what's happening. But the elements that we're handling, our matching engine handled 12 billion on that day with Binance.com. We had got about 85 million. This was on the March 12th day. So our matching engine can handle up to 12 billion. It just doesn't. So in terms of capacity, I think we're, almost coming to the gunfight with an Uzi. Like it's a significant amount of horsepower that we've got behind our systems. And that is just the purpose of why Binance US needed to come into the United States, was the level of technology needed to be delivered to American users to be able to partake in, fastest matching engine and the same technology that the rest of the world is able to operate on.
What gets us there? Do you think the halving is ultimately going to be as bullish as advertised? Is it priced in? Where do you come down on this, and how do you, as a company, think about marketing around this very meme-worthy event, but arguably, kind of nothing in terms of true market signal?
It's the Super Bowl of Bitcoin. No, to me, it's a great opportunity to teach people how the mechanics work. There's a code-based event timed well in advance of anyone expecting. It's not determined by one person flipping a switch. All of this helps us understand in real time the entire brilliance behind Bitcoin. And so if you were in that gap between 2016 and now, you might not be able to see how clever the code was, or how, ingenious the parts were in order to be put in place ahead of it. And now you're having kind of a real life example. So we're able to say and point to it and say, like, all right, everyone's computer turns on, miners are going to have half of the rewards come through following, certain block height. That's just it. That's just in the code. And it gives people a tangible example of understanding how clever Bitcoin really was set out to be. And I think that's really where we're able to dig into the education parts of it and bring more people into understanding it and say, hey, pointing to it, say, this is the halving we're having. At this point, we cannot guarantee what will happen with the price, but we can tell you and show you what's going to be happening across the world. And this is impacting miners, and this is impacting, holders, and this is impacting, and you can draw kind of the chart of where this is actually taking place. So for me, as a kinetic learner, I'm in the midst of it right now. I'm going, okay, if there was a part about Bitcoin I didn't understand, now's my chance to, bone up on all of the materials, get a refreshed sense of what this really means. What does this translate to all the other cryptocurrencies out there, and how did they, pry on different aspects of what truly was, Bitcoin. And that to me is really what we're using this halving for. It's just a re-education, an expansion of the audience that we can reach, because now there's a tangible kind of event people can pay attention to. So that's really the benefit to it. I think we've done a rehash of all of our materials for crypto literacy, just trying to reach a broader audience, give people a singular place to say, okay, I've heard enough people talk about Bitcoin, and I don't trust half the people that said something to me about it, and I do trust half the other people that say something about it. Where's the kind of unbiased approach of learning what this means? And so we broke it down into I think now we're up to 10 parts guide, just weaving people through the components that led us to Bitcoin. So understanding finance, understanding financial crises, understanding asset classes, understanding volatility, risk management, understanding the mechanics of Bitcoin, breaking down cryptocurrencies, crypto economics, all of these things that after I just said all of that, it sounds super jargony. We try to break it down into a little bit more of a, I say layman, but they're awesome people. So it's not layman terms. So this is our chance to push reset. And it also doesn't mean after the halving, we're going to stop we're going to stop teaching people. I think education is just a everyday process for us. It's kind of like stretching.
You guys aren't miners, but you have to have an opinion on what the health of the mining ecosystem looks like, because regardless of what the price action is, there's going to be a structural massive change in mining economics as we go from 12.5 coins to 6.25. What impact does that have on your internal operations if there's a pretty significant downward difficulty adjustment, and in the interim period you have a ton of hash power that falls off because it falls below the break-even point, or it's impossible to actually be competitive for some of the hobbyist miners and some of the smaller operations? I think the death spiral is overdone, but practically speaking, if there's high volatility periods around the halving itself, and it happens to coincide with this longer, maybe temporary, but longer block time period when some mining capacity falls off, does that clog your trading system? Does it clog the pipes that connect other exchanges and brokers and the kind of settlement apparatus of Bitcoin? Or is it just such a non-issue because, in a world of T+2, we're still talking about, T+20 minutes or 30 minutes in a really, down scenario?
Yeah, it is amazing how my expectations of moving money have just been fractalized. I was testing something out the other day, and I think it took about 3 minutes, and I was like, I'm frustrated. This is crazy. Mm-hmm. And, it's just versus the chaos of T+2, or even, a lost wire where you're like, I don't know if I'll get this month, this year. So I do think in terms of our expectations, we've done a great job of accelerating those entirely. But back to the kind of mining report, I will mention that Binance.com did become kind of a participant in the mining sector, and now it's kind of in the top 10 in terms of mining pools. But Binance US does not have kind of a finger in that business. The elements that I think we'll see, it's definitely worth paying attention to, definitely on our roadmap in terms of hash power. But I do think that we saw kind of a washout of hobbyist miners or not viable businesses in the lower dulls of when the price of Bitcoin was not sustainable for businesses of miners. So we kind of have already had our moments of duration where pain was felt. And I think that either gave us a better quality of kind of who's out there, or those that are still in it are no price, no pain, no suffering will affect them. They're just doing it for sake of breathing. Yep.
I'm curious. We talked about this a little bit a couple months ago. I'm curious how your thinking has evolved, particularly as more of the proof of stake networks get closer to launch. Near just launched. We've got a few other proof of stake systems that have been around for a while now, between Cosmos, Polkadot coming out, in the coming months. The mining market is intuitive for many people. The staking market, not so much, because you're creating money out of thin air, but it's going to the existing holders, right? It's almost like a stock dividend. So we've got limited historical data right now, but Mark originally asked a question that's maybe similar to a thread that we pulled on a couple months ago. Who does the staking really benefit? And how do you think about staking versus mining when Binance clearly has a vested interest in proof of stake systems coming to market and being successful via the staking service, and also your use of the BNB token for the Binance DEX?
Yeah, let me read Mark's question a little bit too, because I follow some of what you were saying, but I'll just get I want to answer what Mark wants me to answer. Okay, many tokens, despite giving 8% as an example return rate. Yeah, so this comes down to the point of being able to provide that ease of staking for a user. They can absolutely do it on their own, and it's fun when I talk to some of these early companies that have already backed a lot of these coins, and they've clearly been staking from day one. And I say, hey, we offer staking on Cosmos or Algo, and they're like, literally, we were the original people staking from day one. We know how to do this. So by having staking on our platform, we just make it easier for people to be able to do so and earn the yield that they're expecting from that staking reward. What that does mean is oftentimes you're sacrificing a portion of that for the ease or convenience of being able to stake by going through a centralized platform like ourselves or Binance.com. But where we've seen the benefit is not for us keeping any of those rate of returns. So we push it all back on our users to give them the full amount of staking rewards that they deserve from the platform. And it's just something that right now there's not enough interest in the market for us to be taking that as a revenue model for ourselves. And when the time comes where we have to maintain 12, 15 wallets and keep up with all of the upgrades that are required in order to maintain the system, go through all the governance mechanisms, that's when you're going to see a little bit more of a requirement for the upkeep of it. But for now, we're putting all our staking rewards back to our users, simply being able to show them that, yes, digital assets have several ways of getting involved. And I kind of think of this as the second wave of how people can understand their place involvement in digital assets. One, if you were a natural born trader and love to, catch falling knives and buy the dips, then digital assets are just another marketplace for you. But if you're looking for kind of a different way of involvement through the understanding that you're going to be gaining rewards or wanting to be involved in the project's health or success, then there's another route. So I think of it as just a different kind of exercise that you can have within digital assets. And we put that all back on our users to get their full rewards.
Awesome. There's a couple of other questions here that I want to combine and maybe rephrase slightly. One, because I don't know that a particular question is a complete sentence, so I'm going to try to interpret. But I think in general, as crypto gets larger and larger, and as we see pressure on the traditional markets, there's going to be this convergence where not only will you start to see exchanges like NASDAQ or the New York Stock Exchange or others try to enter crypto and maybe do so in a way that's via acquisition versus just incorporating and building core technologies themselves. On the other hand, we talked about exchange tokens. That might be the very earliest innings of thinking about security-like instruments or new tokenized instruments that could be traded much more efficiently on exchanges like Binance and Coinbase and Wobi, et cetera. How do you think about this convergence, and when do you think that would be a focus for Binance? Is this something that you want to push the envelope on, or will Binance's approach just be wait and see, and when there is adequate liquidity and adequate customer interest, then you'll start to think about incorporating it? Because it doesn't seem like there's that much urgency today.
Are you talking about STOs, or I see one question talking about Forex? So I'm just curious what you were talking about kind of on the...
It could be either, right? So right now on the stablecoin front, we basically have only seen dollar-denominated stablecoins. So you think about Forex trading, that's obvious. If you think about, traditional equities, STOs sound obvious, but the gating item for STOs has always been liquidity, not whether it could be done.
With an asterisk that says regulation. So in order to be a marketplace for, securitized token offerings, there's a huge amount of regulatory push as well that you need to get through. So I kind of think it is like the icing on the cake. We've still got to bake the cake first. We need a couple more layers before we're adding, the frosting roses to the top of it.
Well, let's talk about Forex then.
Yeah.
Because I'm curious why we haven't seen more Forex trading using stablecoins. So we've got a lot of synthetic dollars, crypto dollars. We don't have much in the way of crypto yen or crypto euros or crypto RMB, even though those markets are orders of magnitude larger.
This fascinates me, so I'm excited. So when you break down kind of like what drives Forex markets, a lot of it we take for granted that it's a heavy amount of corporate flow. So about 40% of the FX markets are just related to company balance sheets, repatriating revenues, paying for different workers, pre-funding their bank accounts in different jurisdictions. All of that money flow takes place and is run by some of the most stable, well-balanced people in the world, the treasury departments of companies. So in terms of introducing a highly volatile internet-based digital asset into a treasury manager's role is a lot to go through. So let's just talk about different products within foreign exchange that make it controversial for treasury management. Hedging your FX risk is still considered something that most treasurers are like, do we need to? I don't know. Seems sexy. Let's not touch it. And there are so many different types of ways that you can protect yourself through options, through non-deliverable forwards, rolling your forwards that treasury departments still to this day, some of them choose not to do. And a lot of it comes down to the technical expertise of the Treasury Department, comes down to the impact on the bottom line of the business. You think about, we're seeing a bunch of tech quarterly earnings come out. I'd be pressed to say, let's look at all of them and see where their FX P&L affected their bottom line. And you can sure bet that the top 10 tech teams are doing heavy amounts of hedging in their FX departments and still are losing, good amounts of share to this. So you kind of have to go, okay, zooming out, if 40% of the traditional foreign exchange market isn't even comfortable hedging their risk right now with traditional, well-established products, how are we going to suggest to them that, hey, if you just use a different currency in here, you can zip and zap all these funds around the world instantaneously? Like, that's going to take some time. Believe me, I've set it to be my duty to make sure we have it happen, because I know the backside of all of that business, and I know what we're building in the future, and I'm going to try and make them come together. But it does take a lot of nuanced understanding and empathy to realize that these guys, at the end of the day, a lot of times foreign exchange is a rounding error to the companies. To a lot of hedge funds, FX exposure was a rounding error to the fact that their equities made 18%. So they're like, I could hedge my Indonesia risk, but it's 9% annual. I'm going to make 18% out of it. Just don't hedge the thing. And so you have to really come from the angle of what it means to someone else in order to do so. So is this imperative that it gets, employees paid faster? Is it imperative that it gets, loss of businesses or I guess the pre-funding pain points of businesses alleviated and they have more runway with the capital that they have? Then that's going to matter way more to a company to take it in under their wing. But for those cash flushed companies right now, or revenue positive, behemoths, they're not going to be looking too closely at that being a factor that's going to 10x their business or drive huge global adoption at this point. So I'm still working on it, but it is something that we just need to always be mindful of how nuanced it is, and really what's it to you is what I say every day. When you're sitting on the sidelines of digital assets, what's it to you? Are you happy? Are you sitting on a pile of cash? Does it matter to you? Are you, your head's in the sand? What really does it matter to you? And that's how we can then be able to say, okay, well, if it does matter to you, there's actually a solution ready and waiting. And I think we kind of came around to the relevance of why digitizing money makes sense more recently, with revealing how dirty fiat money is, how slow fiat money distribution is, and how urgent it was to get this into people's hands instantaneously. From a corporate perspective, they're usually closing the books at the end of the month. They've got, invoicing cycles and things all sorted out. So they've kind of pre-baked all of the delays into their own business models. And they don't operate at a pace that retail or individuals. Yeah. Or that we want. If Samsung was going to be like repatriating all of each store sale of a cell phone and zipping it back in. The poor team back at the home base is going to be just flooded. So some of those things are in place to be able to handle it from a perspective of magnitude. But the digital dollar, or kind of the conversations we saw around the stimulus, I think did elevate where digital assets make sense. So that's my soapbox. I'll get off of it. I'm so fascinated by it. God, just gets me excited. You don't realize how many pain points there are in a business, and becoming a truly global company is so difficult that it really does take a lot to be able to understand the nuance of it, but also there's the speculative side of it too, which that's the other 60% of the FX market that we didn't really talk about. So think about that expansion too.
Yeah, I mean, the other nice thing is that the market is kind of coming to us in the form of CBDCs and state-led initiatives to actually trade and settle their currencies on blockchains. So it might not be as far away as we think.
I don't think it would be, and it's been a long time that people are realizing, the world is a volatile place. This is affecting our bottom line, so we got to do something about it. So the pain is getting more and more tangible.
I see a few questions here that I am going to skip over because I think that they could lead to just overly promotional answers regarding trading fees, and we want to not have this be an infomercial for Binance so much as we'd really like to see comments in here to Coley's question on sensitivity to trading fees. I also popped a poll in, which has an N of 1 right now. One person is at least more sensitive than ever to trading fees, so they could be a potential customer and convert, Coley. I do want to end with one other question, though, that Howard Oshwald asks around DEX versus centralized exchange. When do you think DEX will be used more often for large OTC trades by centralized exchanges and institutions, or what is the role going to be, not just for Binance DEX, but DEX in general, as a complement to some of the more robust tools that are available through central limit order books on the household names at the centralized exchanges?
Yeah, I think we've seen a little bit of a maturity in the centralized exchange world, where you're now seeing it become the fiat on-ramps, becoming the centralized space for people to bring local currencies into these digital asset systems. That then gives you the tools to which you can participate in decentralized exchanges. And so there's kind of this dynamic that as DEXs or decentralized exchanges are looking to grow, they still have to be supportive or welcome to the idea that these centralized exchanges are actually the kind of funnel or on-ramp to get people into the native currencies that they need in order to partake naturally in these decentralized exchanges. So I see it more of as my role is purely being able to provide an easier on-ramp into getting people familiar with where, once you hold, a portion of Bitcoin or a whole Bitcoin, where that lets you unlock in the greater sphere. So I totally want the decentralized efforts. So we see, futures platforms, different DeFi protocols being built in kind of a fully decentralized atmosphere. And that's super necessary, but we also need that to grow with the amount of people that are understanding how to get money into those systems. So that's where we see ourselves as a complement. But at this time, the urgency is still getting more people involved and making sure that these platforms can still remain robust and liquid, because there's nothing, a decentralized exchange where no one knows your name and you show up and no one wants to buy it from you is not a necessarily positive marketplace experience. And so we need to make sure that we're creating healthy markets at every step of the way.
Very well said. Coley, thank you again for joining us. We're right up at the top of the hour here. I'm sure we'll have you on again soon when major Binance US announcements comes out, because you guys tend to ship pretty quickly. Maybe it'll even be around some type of acceptance around the New York Bit license. So people that are still in New York or that return to New York inexplicably can get in on the action.
I just want New Yorkers to stay safe right now. Stay in your homes. Please protect all of us. We want to go back and visit that city soon.
Yeah, exactly. Or flee the city with your family, like I and many others did. So
that's true. That's true too.
Hopefully we can. Hopefully we can get back soon.
Stay safe. Stay Safu.
Stay Safu. Truer words never spoken. Coley at Crypto Coley. Thank you for joining us. See you again soon.
See you guys.
All right, everyone. Thank you for tuning in. Matt, what's going on? Welcome to the chats, and hope you enjoyed this interactive session. Good to see you, buddy. For everybody else, thank you for tuning in as well. We're going to be right back here on Friday with another live streamed Q&A, another industry leader. Going to announce that probably sometime tomorrow, but we have a ton of announcements teed up the next couple of days. So head on over to Messari.io, check out mainnet.events and the new halving resources that we have available right on the homepage. We're coming at you every single day from here until forever. Heat death of the universe, or when I keel over from exhaustion.